So right now, all over the news, they're talking about how the Feds cut the rate. And if you're the average person out there, you're probably like, why the hell do I care about this? You're right now worrying about paying your bills, you're grinding, you're working, you're doing all these other things, and you think this is not important, but it really is. Let me explain to you why. So the Fed rate affects credit cards, it affects student loans, it affects car loans, it affects a lot of things within your life because the Fed rate, which was 5.50%, now dropped down to 5. And what that means is that Fed rate is usually part of the mortgage rate or interest rate that you get on any loan that's out there. So with that being said, if the Fed rate goes down, that means your credit cards, your student loans, all those loans you're getting, the rates will go down, which is something people wanted to hear so much, especially those people who are trying to get a house. Now, the good news is this is not going to stop. This is going to continue. This is going to continue throughout 2024 and 2025 and through 2026. So you do have some time to make a decision when you could get your mortgage loan or your car loan or whatever. Now, the simple fact is just because this rate had changed recently, it's not going to happen overnight. But there's a few things out there that can change overnight that could affect you. And that is the high yield savings accounts. A lot of the high yield savings accounts and CDs, they usually start making this change pretty quickly. Some of them already made it because they were anticipating that this was going to happen. So if you have any money in a high yield savings account, expect to get an email or a letter in the mail stating that your rate is going to go down. So when it's all said and done, this is going to affect you for your credit. But there's other things as well why this news is a pretty big deal. Number one, we're all talking about how high inflation is. So you're probably thinking, right now, if the rates of credit cards and car loans are starting to go down, that means more people are going to start spending. More people are going to start applying for all these type of cars and mortgages and start buying. When you buy a home, you buy things throughout your home to remodel, to just furniture, whatever it is, you start buying more and more things, which in nature is the way we get inflation. That's how inflation occurs. So you're probably thinking, well, if the rate is going down, is that a bad thing? It could be. It could cause a lot of issues with inflation, which should cause it to go up. So that's why this is a very delicate thing that they're trying to do right now in the Feds. Okay, Jerome Powell has a really tough job, and he's trying to make sure he could bring everything down nice and smoothly and not disturb the economy. So with that being said, things should get a little cheaper. Do not expect any drastic change happen in the economy, but you will see it really subtle, all these changes happening. And this is really, really, really big news that we're able to help so many families out there, whether trying to get their car, whether trying to get their first home, but it's really gonna help you out tremendously.